Hi, everyone. Good evening. Thank you for joining Corporate Connect. My name is Gerald, and I'll be your host for tonight. This webinar is organized by SIAS and supported by SGX. So many of you might be familiar with NetLink Trust since it has been listed on the Singapore Exchange since 2017. NetLink's network is also the foundation that provides us in Singapore with our ultra-high-speed broadband internet access. So what we'll do today is we'll kick off with a quick market overview provided by Jin Chong from Momo Singapore. Thereafter, we'll have a presentation by Mr. Tong Yo Heng, who is the CEO of NetLink Trust. Thereafter, we'll go into a Q&A session. So without further ado, I'll invite Jin Chong to give us an overview on how the market has performed. Over to you, Jin Chong.
Hi, thank you so much, Gerald. I'll be sharing my screen first. Is my screen being shared?
Yes, we can see it.
Okay, a very good evening, everyone, and thank you, SIAS, for having me tonight to share a little on the market highlights for the Singapore market. So, introduce myself again. My name is Jun Chong, and I'm the equity dealer at Momo Singapore. So I'll just jump right in. So to start off, I'll talk about the fund flow for October 2023. So all of this amazing data, you can actually find them on the SGX website itself. I will not cover everything in the report, but some snippets of it. So firstly, we have the institutional and retail investor net buy or sell figures. So for the month of October, we see that the institution has a net sell of 291.3 million. And this is compared with a net buy of 76.7 million for the month of September. So it's a huge selling by institution for the month of October. And on the retail side, we see a huge increase of net buy with about 726.5 million for the month of October compared to 225.4 million for the month of September. So on these different figures, I'll break down the top 6 buys and 6 sells for both institutional and retail investor, followed by showing it from a sector angle. So the institution net buy for October 2023, the top 6 are actually OCBC, ComfortDelGro, Genting, Yangzijiang, UMS, and DBS. Meanwhile, the institutional net sell, the one that is sold off, it's UOB, Keppel Corp, Citrum, Mapletree Logistic Trust, Keppel DC, as well as Singapore Airlines. So the largest net sell that we see from the institution will be the REITs sector with a total of 224.4 million. The two widely traded S-REIT ETF, the Lion Phillip S-REIT and CSOP S-REIT ETF, actually both of them saw a decline of over 6.5% for the month of October. This current higher for longer interest rate environment may have impacted institution positions on this REIT sector, as this sector tends to be more sensitive to interest rates. So next, we will look at the retail investor side. So for retail net buy for October 2023, the top 6 are UOB, Capital Corp, DBS, SIA, Citrum, and CICT, Capital Integrated Commercial Trust. And for retail net sell, we have OCBC, ComfortDelGro, UMS, Yangzijiang, iFast, and ST Engineering. So on the looking from a sector angle, we see that retail investors, they have been stocking up on both the financial services as well as the REITs sector. The REIT sector has traditionally been a retail investors' favorite, and the higher yield due to the lower price may have attracted a lot of this retail investors' attention for the month of October, which is why we see such a huge amount. So of course, it's not any magic or science, but what the institutions were selling coincides mostly with what the retail investors were buying, vice versa. So of course, the institution were buying OCBC, ComfortDelGro, etc., whereas the retail were buying UOB, Keppel, and then vice versa. There was the other side was selling it. So for the most traded stock year to date by the average daily turnover, with the highest turnover at the top, so DBS at the top, we see mostly STI constituent stock, which includes, of course, the trio of banks, DBS at the top, followed by UOB and then OCBC, and then following downwards is mainly the STI constituent stock. And then comparing the different indexes for the month of October itself, the Straits Times Index actually fell around 4.65%, whereas the US S&P 500 fell about 2.2%, whereas the tech-heavy NetLink 100 fell about 2.08%. Closer to home in Asia, the Hong Kong Hang Seng Index fell about 3.91% in October, whereas the Korea Kospi fell over 7.5%. The Japan Nikkei 225 closed off with a little over 3% losses. So for the STI, this data is as of yesterday. The Straits Times Index was up over 1%, with the Sembcorp actually recording gains of a little over 10%. As of today's market session, it has fallen off slightly. And on the REITs, Mapletree Industrial Trust was up over 2.5%, whereas Capital Land Ascendas REITs was up a little over 3%, whereas the Fraser Centrepoint Trust was up nearly 5%. Of course, for the month of for the current month to date for November until yesterday, the trio of banks was also up a little over 1%, with OCBC up 2.2%. So for 2024 outlooks, consensus has been that the interest rate cuts by the US Federal Reserve, it's expected to be mild, with consensus around 50 basis points for the year. The lower rate cut will inevitably mean that the higher for longer interest rate environment will be here to stay. And this interest rate sensitive sector and financial instruments maybe the focus of investors. For instance, the sectors I mentioned earlier, for instance, REITs and financial instruments like money market funds, treasury bills, T-bills, Singapore savings bonds. For some investors, they may be looking at a fixed deposit or high yield savings account. So these are financial instruments that may be on focus to many investors. So on Singapore GDP side, the Q3 GDP figures were 0.7%. This was a higher than the 0.5% in the previous quarter. MAS has actually maintained the 2023 full year GDP forecast to actually be on the lower range of 0.5 to 1.5%. So against this external outlook, MAS prospects that the Singapore economy is muted in the near term, but it should gradually improve in the second half of 2024. And on inflation, MAS core inflation, it's forecasted to slow to an average of 2.5% to about 3.5% for 2024 as a whole. And lastly, for my last point, it will be on consumption. The GST will increase 1 percentage point in 2024, So on the topic of inflation, excluding the impact of increase in GST rate that will happen in 2024 January, the core inflation could have been forecasted at 1.5 to 2.5%. So of course, this 1% increase will inevitably increase the cost of living, and thereby it may affect sales and profits for a lot of companies in the Singapore market as well. And for that, I've ended my market highlight sharing.
Okay, thanks so much, Chun Chong. Next, we will hand over to Yo Heng, who will run through the slides on NetLink Trust. Over to you, Yo Heng.
Hey, thanks, Gerald. A very good evening to all of you that joined this call today. Myself, as well as my CFO, Diane, will take you through our presentation. It will take about 10 to 15 minutes, and thereafter, we'll be happy to take any questions that you may have. I will dive straight into it. Over to the next page. This is a disclaimer for your information that this presentation includes a forward-looking statement. Over to the next page. Firstly, about our business. NetLink is the owner and operator of the fiber to the home network in Singapore. So we have about 10 central offices across the island in Singapore, and from these 10 central offices, we have underground ducts to all the buildings around it, and within those ducts are fibers. And today, as at 30th of September this year, we are connected to 1.491 million households. So 1.491 million households are using our fiber for broadband services. And we have a connection to 52,568 non-residential users or commercial premises. We also have outdoor location connection of about 2,800 and another 3,200 of what we call segment connection, which can be from building to building or point to point. So this is a snapshot of all of our connections that we provide in Singapore today. Next page. We get asked a lot about our fiber to the home network. We get asked questions about competition. We get asked questions about the penetration rate as well as the capacity and the longevity of the fiber asset. So this is a slide that we put together to address some of these questions. Today, fiber is the only means of fixed broadband delivery in Singapore. What do I mean by that? In the past, I think many of you would be familiar that for broadband access to the internet, you could use fiber broadband. You could also subscribe to cable broadband or even copper wired broadband. But today, fiber is the only means because there's no longer copper wire or cable broadband. So we have a very steady business because any home users that wish to have a broadband access will have to use our fiber infrastructure. And that is why we have a very high residential penetration rate. I think importantly, if you look at the middle of this slide, fiber broadband prices today in Singapore are still lower than in many other countries. That make broadband access very attractive in Singapore. And fiber infrastructure is also a critical infrastructure that can support last mile access. We support today Wi-Fi hotspot and some of the 4G and 5G base station. And of course, we are also connected to some of the surveillance camera and so forth. So fiber is not only used to connect to the homes or offices, but also used for last mile access in outdoor location. And fiber capacity is highly scalable. We have a lot of fiber in the ground connecting to many buildings and outdoor location. This fiber is highly scalable in the sense that it could carry higher capacity. Today, the fiber to the home carries mainly up to 1 gigabits per second. However, it can actually carry 10 gigabits or more. So even with the step change in technology, moving from 1 gigabits to 10 gigabits per second, and going forward into the future beyond 10 gigabits per second, the same fiber could be used. That's not the issue. So our fiber can handle a different capacity, and it can also support future transmission technologies. So our fiber asset has a very long and useful asset life. Over the next page. Here's a quick look at our first half number. Our first half FY24 ended September this year. Revenue increased 2.9% to 205.3 million. EBITDA or operating cash flow increased by 2.4% to 149.1 million. And on the bottom half of this slide, you can see a few key numbers. Net gearing is 21.5%. It's still a very healthy level, a fairly low level of debt for a stable infrastructure business like ours. Weighted average debt maturity is 2.9 years. And the market capitalization based on the unit price of 84 cents is a total of 3.3 billion. Next page, please. Here's a quick look at the fiber connections over the years. You can see that across the different segments, non-residential, non-residential, and so forth, fiber connections have increased. So we ended the first half of FY24 at 1.492 million residential connection. Non-residential is 52.6 thousand. Non-building address point 2,800 and segment fiber 3,200. So fiber connections has been growing. I like to use this slide to explain our business because it shows very clearly the stable revenue from the different segments. For residential connection, we derive 60% of our total revenue for the half years FY24. For non-residential connection, the contribution is 8%. For embed and segment connection is 4.6%. And then ducts and manhole, which is the leasing of our underground fiber ducts to Singtel, 6.6%. So if you look at this, added up together, it's about 79.3%. And on the right to ducts and manhole, you have co-location revenue. This is a leasing of our space in our central office to other telcos, 4.8%. All of this revenue are what we call RAP revenue because they are part of the regulatory asset base for which we will earn a fixed return determined by the regulator. And on the right-hand side, you will see central office revenue. These are leasing of space largely to Singtel. We also have installation-related revenue. These are revenue that we earn from carrying out installation for telcos and other consumers as well. And rightmost, we have this ancillary project revenue, 5.5%. These are largely work done for diversion projects, diverting underground cables so that construction work could be carried out, 5.5%. So if you look at our revenue model from the left to the right, you see that a lot of these revenue are recurring, fairly predictable, and long-term. So I would say we have a very resilient business model. Next page. Here's a quick look at what we are focused on, right? As a fiber to the home operator in Singapore, we continue to focus on the network reach and the densification of our network. And therefore, we continue to invest in our network so that all buildings can be reached. And also in outdoor location, we continue to densify the network so that we could easily connect to any of the outdoor location in support of fiber to anywhere kind of deployment. We are also improving our competitiveness in the enterprise space, in the government segment space. And we are looking forward to support the upgrade of the nationwide broadband network to support and carry 10 gigabits per second. I can talk more about this later on. But today, by and large, the entire nationwide broadband network largely support 1 gigabits per second to home user. There's a move to upgrade this to support 10 gigabits per second. And the fourth bullet point here is we mentioned that we will look into investment opportunities outside of Singapore, and that continues to be the case. But we will not be in a hurry. We'll be looking for interesting assets that will be able to generate a stable cash flow. And lastly, to raise the level of brand awareness, brand affinity with end users. So we have a fairly low level of marketing campaign, right? When I say fairly low level, it's because we do not want to over-invest or spend on marketing. But we do have short videos that you can access on our YouTube or LinkedIn channels, and you can see and understand more about what we do. And we hope through that we can connect to more end users. With that, you will hand over to Diane, my CFO. She will take you through the key financials. Diane, please.
Thank you, Yu Heng. Good evening, everyone. Thank you for being here with us this evening. You must have already seen this set of financial results on that we released on the 3rd of November. So I will just keep it very brief and let you ask any questions that you have. Revenue for first half of FY24, 205 million, EBITDA 149 million. This is 2.9% and 2.4% higher than the first half of FY23. Most of the higher revenue comes from a regulated asset base and as our connection numbers continue to grow. Our EBITDA margin was 72.6%, which remains largely in line with the previous corresponding period. And profit after tax, however, is lower by 3.1%, mainly due to higher finance costs, depreciation, as well as income tax expenses. So you look at this slide, net finance cost rose to 9.2 million. It's higher, but if you look at the next slide, it represents about effective interest rate of 2.64%. Next slide, please. Yeah, so effective interest for the first half of FY24 is 2.64%. It has been quite consistent for the few months in the first half of FY24, although it's higher than the previous corresponding half year, but I consider it still a comfortable rate in the current interest environment. And that's because most of borrowing, 69.4%, is actually already locked in at a fixed rate. So we are quite comfortable with it as of now. No hurry, no pressure from a high interest rate environment. Our gross debt remains at 735 million, and the key credit ratios, net debt to EBITDA, EBITDA interest cover remains healthy. On the right side is our cash flow. So you can see NetLink generated strong cash flow from operation, 154 million. Together with our cash reserve, we are able to fund our capex, 72 million, our distribution, 104 million in the first half of FY24. Next slide, please. Distribution, you already know that we are declared 2.65% for the first half of FY24, and this represents 1.1% increase compared to the previous period. And based on the unit price as of 30th September 2023, it is a distribution yield of 6.3%, which is almost 3% higher than a 10-year Singapore government bond. NetLink tries to grow our distribution in a sustainable way. And if I look back from IPO days to now, NetLink has returned a total of 1.2 billion to the unit holders based on our distribution policy and the results we achieved. So with that, I think I stop here and I maybe see whether you have any questions. Thank you very much.
Okay, thank you for the sharing. So with this, we'll open up for questions from participants who are joining us tonight. If you're on Facebook, we'll have to trouble you to join us on the Zoom webinar, where you'll be able to ask us questions directly. Okay, so with that, I'll start taking some of the questions that have already come through. I see quite a number of them have already been put into the Q&A box. So if you've got any further questions, do continue to put them through the Q&A on the Zoom webinar. Okay, so I'll start with this question from Daryl, and it's a question that we have often been getting. Can you share more details on the regulatory review and potential impact on NetLink's business? I believe this regulatory review was supposed to be completed sometime earlier this year, but it seems like we have not really have update as yet.
Thank you for the question. For the price regulatory review, certainly the expectation was that it should have been concluded some time ago, quite some time ago. It has taken longer, but it's not a concern for us. In fact, it's taken longer partly because of us, partly because we have gone back to the regulator to revisit some of the projections and so forth. One is CAPEX, because we have more recent data, so we have gone back to regulator to talk about CAPEX. We have also gone back to regulator to talk about OPEX, because OPEX has increased. I think the earlier speaker has also talked about increase in cost of living. And certainly as a business, I think NetLink is not alone. Most businesses in Singapore are operating in a higher cost environment. When will it be finally decided and announced? We expect it to be within this calendar year, which means by the end of next month. Right, we're looking at the end of the year, so I hope so. And the question also asks whether there's any potential impact on our business. I would say, obviously, when the regulator make a decision, there will be a rate of return, which may or may not be the same as what we have today. And there will be, and as a consequence, there will also be adjustment to the pricing. So there will be some impact to the business. But I would say this, our expectation is that given our stable and strong and predictable cash flow, we do not expect any of these to have material impact on our distribution going forward.
Okay, so as a follow-up question, there's this question about the sustainability of your distributions. I think earlier you mentioned that we are seeing high inflation. How do you think about your distributions in an environment of sustained high interest rates as well as high inflation?
I think, as my CFO mentioned, we are quite comfortable with the level of gearing as well as our effective interest cost at 2.64%. I think it's quite a decent number in this current elevated interest environment. We have a debt that is relatively, I would say our gearing is relatively low, very manageable. We have very strong cash flow. If you look at our financials, we generated more operating cash flow than what we have distributed. And those that we did not distribute, we spent quite a large part of it on CapEx. And if we have more CapEx going forward, then we would borrow to meet the CapEx requirement. But based on our estimates, I think we are quite comfortable. And we will continue to generate cash flows that exceed our current level of distribution. So we do not expect distribution to be affected.
Okay, I guess the next question for Diane, really around the effective interest rates. I think Cheng Xiang actually noticed that your effective average interest rate has increased quite a bit from March to September. How are we thinking about the interest rate over the next 6 months? Do we have significant debt that is due for refinancing? And what are the interest rates that we are looking at for the portion of debt that is due for refinancing?
Hi, thank you for the question. So I think just now I mentioned that actually for the interest rate for the first half of the FY24, actually every month is pretty consistent at that level. So the weighted, it doesn't actually go up very significantly for the last 6 months. So I think most of us, about almost 70% of debts are actually at a fixed rate, which is quite low. I think it's below 2%, 1.8%. So that's why we are able to achieve this constant low interest rate. For the next half, I think we remains we're not under any pressure. There's a question as to how much debt we're due for refinancing for the next 12 months. There isn't any. So our loans actually is 3 years and 5 years. So the next the first one that coming up for refinancing is actually all the way in 2025, mid of 2025, late of 2025. So we are not hurry into under pressure to look at the refinancing. And even when the refinancing comes, I guess based on our balance sheet, we are quite robust and strong. So we are comfortable in that space. Yeah.
Okay, so since we are on the topic of distributions, there's this question about impact from higher carbon tax. Will there be any impact to NetLink financially with the increase in carbon tax from $5 to $25 per ton of greenhouse gas emissions from next year?
Thanks for the question. We are not a very significant emitter of greenhouse gas We do not foresee any direct impact, but obviously this whole space is changing rapidly, and the level of carbon tax will continue to increase. But I would say we are not significantly affected because we don't emit. A lot of the electricity that we use are paid for by our tenants, our telcos that use it. They are the one using most of the electricity. We are passive fiber operators, so our fiber doesn't require any electricity. There are no active equipment. So our level of consumption of electricity is actually very low. If you talk about scope 1 and scope 2 electricity, scope 1, those are what is covered under scope 1 basically for us is largely fuel that we consume by our vehicle, our fleet of vehicle. We have a fleet of about 27 vehicles, so they will consume some fuel, but it's not significant compared to other businesses of our size. So we emit very little. But having said that, we take ESG sustainability very seriously. We have set ourselves certain targets. We have set ourselves a target to reduce by 50% by 2030. So that's a target that we are working towards. And actually, we are in the midst of making certain changes so that we can meet the target. So those are things that we will do. Yeah.
Maybe you can share some of these initiatives that you are looking at for those that have been publicly announced. What are you looking at to be able to achieve these ESG targets?
Sure. Obviously, I think we have announced it. It's in our sustainability report. The low-hanging fruits will be to change out old lights into LED lights, and those are things that we do at our building. We operate from 10 of these central offices across the island. So we will do that. The other thing that we are doing is also to replace the old chillers. We have chillers for cooling the building. So we are in the midst of, we have changed some, and we are in the midst of changing out the rest. So, but this will take a few years to complete. So we want to change to those that are more fuel efficient, and also those that will use refrigerant that are also more friendly to the environment. So those are the steps that we will take. We will also, like everyone else, right, moving into electric vehicles. So our fleet of internal combustion engine vehicle will be changed in due course to electric vehicles. So those are some of the initiatives. But obviously, we are also looking into other areas. For example, we are building a new central office in the north in Singapore. It will be green mark, but we are also trying to make sure that we get a higher level than the lower level of green mark. So there are various initiatives being worked out, like the type of insulation, the type of chiller, and things that we use. Yeah.
Okay, thanks for that. I think moving on, quite a number of questions around your distributions. I think that's what a lot of the participants here are are looking forward to. So I guess the first question is around any particular distribution policy, and is there any scope to be changing such distribution policies?
I think we have that slide that we have shown. Since our IPO in July 2017, we have never cut distribution. Distribution has always increased every year. And today, I'm very happy to say, since our IPO in July 2017, we have returned to our investor a total of 1.2 billion on the one hand. On the other hand, we have never raised any equity from unit holders. We have not come back to unit holders with a rights issue or with a preferential issues. So we have managed our balance sheet well. The business continues to generate steady cash flow, and our expectation is that our cash flow will continue to support a healthy level or stable level of distribution. I cannot give specific forecasts, but I would say, looking at the business, we expect it to generate a stable level of cash flow to support our distribution. And you can see from I can only refer you to our track record, right? Which I believe is a reasonably decent one.
Okay, so there's a related question here, which I think you have partly answered, but I think they want to hear from you. So in view of the strong cash flows, is it safe to assume that there's little likelihood for equity fundraising in the foreseeable future? This is a question from James.
I can say this as of now, right? That there's no plans. And really, for equity fundraising to happen, there must be a strong reason. Otherwise, how do we convince investors to support it, right? I see no reason now, right? We have plenty of debt headroom we can borrow for capex. We have a healthy level of cash flow to support our investment. So even though actually this year and next year we expect capex to be higher than our usual annual capex, that is no secret, because we are building a central office that costs us almost 100 million. And then we have some other projects ongoing. So even though we are investing more this year, next year, we have sufficient cash flow. So we are very comfortable.
Okay, so I think we have answered most of the questions on the distributions, concerns about equity fundraising, but the participants are also looking out for more. They not only want you to give good dividends, they also want you to be able to grow your distributions. So the next question is, what is your growth plan to be able to increase distributions for unit holders?
No, it's a very good question, because we ask ourselves this question all the time, right? As management, we have the responsibility to our unit holders, to our investors, to manage the business well, and also to manage to grow. Basically, by managing, I mean also to seek out growth avenues to grow the business. But first and foremost, we are very focused on this fiber to the home network, because we have a responsibility to make sure that it's reliable and it covers 100% of all households in Singapore. Basically, we want to serve every single building, every household in Singapore. So we continue to invest in it. As long as we continue to invest, we would get a return on our investment, because we are regulated that way. So every dollar that we have invested in the network, we will get a return. So that's how we derive the growth. But we also know, I think to be frank, we also know that our network is actually more or less fully built. The new investment will go towards connecting to new homes, let's say Tengah, right? Because that's been continued to be built out, and all the BTOs that people read about in the newspaper. So we will be building to all those areas. So there will continue to be investment, but the level of investment will be less than a few years ago, right? It has to be to this new build, because there is just less new build. Sorry, don't get me wrong. The new build is the same. There's in the past, we are rolling out the whole network. So even the existing households, they don't have fibers, we are rolling out the fibers. But since more than 5 years ago, we have more or less covered the whole of Singapore. So we don't have to invest as much, right? So the level of growth will be more at a lower level compared to previously. So we are looking for a new avenue of growth. One area that we see that will grow at a higher rate than our residential and non-residential will be the outdoor location. It has been the case if you look at our numbers over the last 3 years. The outdoor location have seen better growth numbers, and we hope that will continue. And we are engaging various government agencies, various telco operators also to see in what way we could help them to roll out more to outdoor locations. Right, this will be our point to street infrastructure, so that we can provide them more fiber connections. Apart from this, obviously, we have mentioned that we will look for growth outside of Singapore, but we want to be very cautious here, because it's not so straightforward. We want to make sure that we do not take on too much of undue risk, right? So we will continue to be careful about evaluating investment opportunity outside of Singapore.
Okay, will NetLink be involved in 5G and 6G network?
Okay, if you, by involvement, you are referring to whether or not we will operate this network. No, we won't operate this network. We are not a mobile network operators, but we are really truly involved in it, because we provide fibers. We don't provide all the fibers, because some of the operators can roll out their own fibers to support their own 5G rollout. So, but we do provide fibers to support some of the operators for their 5G rollout. This will be fiber to the base station, and any location that they need that kind of fiber connections. We have done quite a lot in this space for 5G. Actually, we also provide fibers for 4G. And you mentioned I think you mentioned 6G, right? 6G is it'll take a while yet. It has not been finalized, but it will come. it will come maybe by 2030. I don't know. The standards have not been finalized, but the requirements have been talked about amongst the standard setting bodies and regulators. So it will come, and it will require even more fiber. Actually, it will require even more fiber because they use higher frequency, which means shorter distance.
Okay, so based on that, this participant has asked, are you able to provide a projection on the growth in fiber connections in the 4 segments that you shared?
Okay, firstly, we shy away from giving forward numbers. Okay, I think the best way to look at our growth will be look at our historical number over the last 3 years. That will give you some indication. But we do hope that with more applications and more data, specifically more data intensive application, as well as the need for a higher level of safety, security, there will be more fiber connection required for outdoor location. And we hope that will drive a higher level of growth than what we have seen over the last few years. So I would refer the investors to look at our last 3-year number for these 3 segments. And anyway, they are available on our website. You can have a look at the numbers and you can make the comparison.
Okay, so we have shared some of the growth angles. I think the participants are concerned about the risk as well. So I guess the first question is, given that Singapore is a small nation, will there be potentially running out of business opportunities as the market gets saturated?
I think no. My view is no, because we're in a good space. Because fibers will continue to be needed now as well as going forward in 10, 20 years. Because today we are using more and more data intensive applications. And to transport those high volume data, you can only use fibers. That's why all the homes are connected. People are using it for broadband access. Of course, people also use mobile for broadband access, but it's complementary, right? When we are on the move, we use mobile. But very often in the office or at home, we use both mobile and fixed. We usually do not just rely on mobile because only fiber can carry a lot more data, right? And recently, I think I can share this data point. Recently, I just read in because we don't measure the amount of data that our home user use because we don't provide any active equipment. But in New Zealand, another listed company called Chorus, they provide fiber to the home, but they also provide active equipment, so they measure every month. Today, an average New Zealand household transmit a gigabyte, not gigabyte, 1,000 gigabyte of data, 1,000 gig a month. Hard to imagine, right? But they say it's 1,000 gig a month. That's a lot of data. So you need a fiber. You can't load this kind of data onto a mobile network, right? So we think that the future will continue to require fiber. And that is why we are also looking at upgrading our fiber network to take 10 gigabits per second. That's what the Singapore government and IMD have said. Over the next 5 years, they would like the Singapore network to upgrade to 10 gigabits per second. And then you may ask me, what does it mean for NetLink? NetLink can support that because same fiber could be used. We don't have to lay another set of fibers, so we don't have to spend a lot of money. But NetLink will be involved actively because we will have to make more space available in some of our central offices, more cooling, more power available. So we will make some investment there to support all the telco operators that offer broadband services so that they could upgrade to provide our residential user, non-residential user, 10 gigabits per second type connection. So there is a good future for this fiber to the home network.
Okay, we probably have to check how much Netflix the people in New Zealand actually watch, such that they're using so much data on a monthly basis.
Actually,
Okay.
I have no idea why so much, but this is not just one data point because I've been tracking it over the years. So you have moved from a few hundred gig to now they say it's 1,000 gig per month on average. So it's a lot of data. maybe sometimes it's not obvious to us. We just switch on, there are multiple devices at home. So it's not just Netflix, Disney Plus, but also for Zoom and for many other applications that we use, right?
Yes, just like the webinar tonight.
Just like the webinar tonight. And then there are a lot of smart home devices. I'm sure it's creeping in already. Now you can control your aircon when you're in the office. You want to switch on your home aircon before you reach home, right? Or whatever. I don't encourage that, by the way, but because they consume more power. But there are a lot of smart gadgets nowadays.
Okay, so maybe just dwelling a bit further into this part around the communication infrastructure upgrade in Singapore. I think this was something that you talked about in your recent results release as well. Is it a given that NetLink will be the partner to the Singapore government in these upgrades, or is there a chance that there might be other competitors in this space?
For fiber to the home, we are the only operator. When I say fiber to the home, means the fiber network that serve all the households. We are the only one with that network, so it has to be us. Has to be us. In the commercial space, obviously, commercial user, they have alternative. They could use fibers from other operators or use our fiber. So they have an alternative. But our 1.5 million residential household, if the upgrade happens, it will be over, the 10 gigabits will be delivered over our fiber network.
So I guess the related question is there a risk that there would be a second fiber operator serving the households in Singapore?
I think the risk will be very, very low because it will take many years and it will cost a lot to roll out a fiber network that is island-wide that cover all the household. Yeah, I think it's financially and logistically very, very challenging. Yeah.
Okay, we also have some participants here who are very up to date on the technology and also climate change. So this question is, does climate change have impact on fiber operation? For example, high heat and heating and flooding.
It's interesting. I think Singapore is quite well sheltered, right, in a way. And we don't see a lot of flooding situation in Singapore, serious one, right, compared to what we see in the media, right, for other countries and all that. But we do look at this issue. So firstly, our central offices, right, they are not in flood-prone area, not now and not into the future, because we have looked at now as well as going into the future whether those areas could be flooded, because we don't want any damage to equipment. So we have looked at it. In fact, we also have flood protection equipment if we want to, right? This will be like, it's not a sandbag, but I think easier to describe as sandbag. But we have inflatable bags like this kept in central office if we want to deploy, because that will help to create a physical barrier. But we have never seen the need to deploy them because we are not in flood-prone area. And our cable are not affected by water. Underground cable are not affected by water because, frankly speaking, now you open up some manhole, there are water inside already. And the cable is there, whether it's copper wire or fiber, they are already there. The issue for us is to pump up the water. If there's a flood or there's more water, it just takes us longer to pump up the water before we can access the cable. So we have looked at this issue. And fortunately for us, we don't have climate change impact like typhoon or other more serious stuff, right? So, or earthquake. So we are in a fairly safe zone. So the only thing we are a little bit more concerned about is flood, but we have looked at the long term. We don't think we will be significantly affected. Not going to be an issue for us. Yeah.
Okay, so moving from the ground to satellite, is broadband satellite internet a serious risk to your business then?
I'm personally interested in the technology, so I follow it quite closely. Interested as a, not because of my business. We are not in the satellite business, but no, I think no. They are not going to be affected. We are not going to be affected because firstly, it's more expensive. It's difficult to deploy in Singapore. It's available in Singapore, but it's difficult for household to put up an antenna. The smallest one today will still be 1 foot by 1 foot, box, So you got to hang it somewhere. You can't hang it outside your window, you know, our high rise, you will drop, you know, HDB will go after you. So you still need an antenna. You still need an antenna that maybe 1 foot by 1 foot, and it's not static. You have to track the satellite. Because satellite is low Earth orbit, is spinning around the Earth, right? So it's not going to be a challenge for us. It's not going to affect us. I think it's lower cost with fiber. It's more reliable with fiber, lower latency with fiber. So we don't see that as a threat to us. Actually, it is very good for some countries with very large country, remote area, rural area. I think it's very good for them because they can get connected. Because in those countries, in those places, even today, they don't have mobile. You know, some of these places in far-flung India, some areas, they may not have a connection. Or even in the US, in some part of US, it's best served by satellite. Because they don't have a good and reliable signal. So it has a purpose. But in Singapore, it's just perhaps less relevant to a very dense urban area.
Okay, so if broadband satellite is not something that actually concerns you, maybe you can share, based on your personal interest, what is a technology that excites you, and also what is a technology that worries you?
I think today, you see, if we look at firstly our broadband fiber, we are excited that you know, it continue to evolve, right? From 1 gig to 10 gig. In fact, 10 gigabits, and the next step will be 25 or 50 or 100. All these standards are being discussed, so I can say it's not the number that I pull from the air. So eventually, you will, you know, home user, if we live long enough, we will be using 100 gig per connection. So the standards have been discussed, not finalized. 50, I think 50 is almost there. 50 gigabits is almost there, almost going to be finalized, but it's not going to be rolled out. I say the upgrade in Singapore is only up to 10, right? 25 has been deployed already in some country for selected use. So this is good for us, right? If you are a fiber operator, the technology continue to evolve and they will continue to use our fiber. That will be good. That means our fiber asset will have a very long and lasting useful life, right? And for the developer of this technology and the people behind this technology, they are developing all these new standards to use the same fiber. They cannot do it otherwise because everywhere in the world, people have invested in this fiber. And fiber is 80-90% of the total cost. So whatever technology that comes, they have to continue to use the same fiber. So we don't really see a threat going forward. Yeah.
Okay, so I guess having looked at the upside drivers, some things that excite you, what are the key risks? If you were to take a step back and look at the overall strategy, what are some of management's strategy to be able to drive distributions? What kind of assets and geographies will fit into NetLink's portfolio?
Okay, when you say asset and geography, I think you're referring to overseas investments.
Correct, inorganic. So maybe you can talk about like organic opportunities as well as inorganic opportunities.
Okay, I'll just touch briefly on the inorganic outside of Singapore. I think we have looked at the number of transactions. I think we would like to do fiber more than, say, data centers or towers, right? Because fiber is what we do. But we have looked at all of these investments. But as I mentioned, we are not in a hurry because generally either they are of very high risk because they are greenfield, require a lot of investments, or they are already built and doing quite well, so very expensive. Because there's a lot of investors nowadays in this infrastructure space. So we do not want to compete with some of these very well-funded investors too. So we are looking at deals that make sense for us. I cannot promise that we will find them, but we will take our time to look for something that is meaningful. That's the inorganic part. So it can be developed and non-developed countries, but at the end of the day, what we are mainly focused on is the stability of the cash flows. Whether there's clear visibility, whether we could access the stability. If we cannot get answers to this question, then we won't invest. Good answers to this question. Then back to our organic growth area. I talk about trying to grow the outdoor segment. That's one major area that we want to convince more users to wire up, to order connections from us so that they can have a better network, outdoor network. We are also looking at institutions and government agencies to see in what way we can extend our network to support them. I think this is, to be honest, is moving slower than we like, because I think some of these new application, I think some of these agencies or users are still considering whether or not they should be an early adopter of some of these application, right? A lot of application has been talked about for a long time, actually. Too long from my perspective, but it did not materialize. Let's say like, I'm sure you read in the newspaper about smart lampposts, right? You know, it's on and off. So still, I will just say this, right? It's not going to be deployed on a wide scale yet in Singapore. Although it has been deployed in a wider scale in some cities. Smart lamppost means the light intensity could be adjusted, not just on and off, but actual intensity could be adjusted based on the traffic at any point in time. The whole idea is to reduce the amount of energy consumption or to use energy as and when you need it, right? All these technologies are available, but of course it costs money. So the cost benefit has to be worked out. So there's no sort of rapid adoption of some of this technology in this part of the world. So we will have to see, how this evolved. Some of these are really outside our control, but we try to participate. We try to encourage earlier adoption by offering our fiber network, to people who wants to do a POC or trial, so that they can try it out. By the end of the day, I think I would say, frankly, it's very difficult for me to give any kind of assessment, right? But I can only take a look at what technology may be available, and hopefully those technology will be adopted faster rather than slower. But some of these take a long time.
On the point relating to acquisitions overseas, do you find that foreign regulators are becoming more sensitive towards the acquisition of such strategic assets?
I think I don't think so. I don't particularly see that. But a number of jurisdictions, they always have, when it comes to telco space or some other space, they already have sector regulations. Just like I can talk about it. Just like Australia, they always have this foreign investment relation review board, FIRB, to review all kinds, not just telco, all kinds of investment going into the country. The US has it, and many other countries have their own regulator that look at the space, because whether is it electricity and telco, there are regulators involved. So some countries are a little bit more open, some countries are a little bit have a set of rules that they follow. So I think it depends on the country.
Okay, so we also have got participants who are concerned about your share price and definitely want it to be higher. So Bernard mentioned that the current price is below the peak of $1. Chi Kiong mentioned that it is way below the NAV. So how does management think about the share price, given that you are operating effectively as a monopoly and the market may not be reflecting this in terms of your share price?
I think we have a job to do that's why we participate in this forum. We have a job to do to convince investors that we have a very stable business. However, I must say that because there's not many business trusts listed in Singapore, so we are actually seen as a used stock by many investors, and a lot of investors, both retail as well as institution, compare us to the REITs in Singapore. So in some way, we are the trading pattern for NetLink is quite similar to some of the better REITs. So you will know that why our unit price has come down over the last 12 months or so. That's largely because of interest rate. Interest rate has gone up. T-bills have never been 4%, last time. Now it's 4%. So that is risk-free, right? So where are we now today? We are about 6.3% yield today, compared to a T-bill, let's say, I use round number, 4%. So we are trading at about 2.3% premium over the risk-free. So if you look at REITs, I think many of you are REITs investors, you will know that REITs have generally been trading at also about 2.5 to 3.5% premium over the risk-free rate, right? Singapore 10-year bond or the US Treasury. So investors in U stock generally would like to apply a premium to stocks because, well, equity has risks. Just that different equity has different risks. I would like to say NetLink equity has very low risk. So investors need not apply such a large premium, right? But it's really up to investors. But it's also the management job to explain the business model, which is why we like to participate in this SIAS conference so that we can explain as much as possible to investors so that they can understand our business model. Actually, we have very low risk. Firstly, we don't come back to investors. We have never come back to investors to ask for fundraise, right? We only give distribution. So that should be a very clear signal that clearly indicate that the risk is actually far lower than many of the other comparable, so-called comparable investments.
Okay, so we'll come to this final question for tonight. Based on the questions that we have received, clearly some investors like you for your steady distributions, but then there are also investors who want you to be growing faster. So how does management see in terms of balancing between income versus growth?
I think the income part, the cash flow part is very steady because we have a steady business. But management will continue to work hard to see how we could extend the network to get more growth, especially from the outdoor connection, so that we can generate even more cash flows and we can invest more in the outdoor network to generate more cash flow. That's something we would always try to do. Sorry, I lost track of, did I miss a part of your question?
So how do you balance between income and growth?
So growth I'm trying to do, right? Income and growth from the shareholders' perspective, is it?
Yes.
I see. Sorry, I missed your question. I think generally most investors still see us as a sort of an income stock, right? Providing low risk and providing a steady distribution. But we also know that most investors are not satisfied with just pure income, fixed income, right? This is a stock at the end of the day. So we are trying our best to deliver higher growth. We have grown our distribution every year. So that's our aim. I cannot promise it, but that's our aim. We'll try to continue to do that.
Okay, thanks so much. And hopefully when you join us for the next Corporate Connect, we'll be able to, number one, already get an update on the regulatory review, and then at the same time, further see your track record in terms of delivering this distribution growth. So with that, I'd like to thank all the panelists tonight for joining the sharing. For the participants, we hope that you find the Corporate Connect session informative. If you've got further questions that we have not been able to answer tonight, do feel free to contact the company directly. If you miss any part of today's session, if you want to have a repeat of what has been shared, you can watch the webinar on SIAS YouTube channel. And in case you're not aware, Corporate Connect is our monthly webinar where you'll be able to get an opportunity to interact directly with the management of listed companies. The next Corporate Connect will feature Elite Commercial REIT, and that is on the 28th of November. So if that's something that you're interested in, do join us for that session as well. So once again, thanks so much for joining tonight and have a very good evening. Thank you.
Thank you, everyone, for joining us.
you.
Thank you. And thank you, Gerald. Thank you.
Thank you.
Thank you.